Building a stable financial framework for Bitcoin, full reserve lending, hold to maturity, and on-chain transparency. 1. Introduction. As Bitcoin continues to evolve from a speculative asset to a recognized financial instrument, the potential for it to serve as an alternative reserve asset becomes clearer. However, to solidify Bitcoin's role in global finance, particularly as a trusted collateral asset, a robust framework must address Bitcoin's volatility and uphold transparency. By applying concepts from traditional finance, namely full reserve lending, hold to maturity HTM practices, and on-chain transparency, we can construct a stable financial architecture that leverages Bitcoin's strengths while mitigating its inherent risks. This exposition explores how such a framework could establish Bitcoin as a viable, long-term reserve asset for lending markets. Historical context and principles of hold to maturity HTM. The hold to maturity HTM classification originated as a solution to manage the volatility and liquidity of traditional financial assets, primarily bonds and other fixed income securities. In traditional finance, HTM securities, such as U.S. Treasury bonds, are intended to be held until their maturity date, providing consistent returns without the need for short-term liquidation. This practice allows institutions to plan cash flows and income streams predictably, as they can rely on these assets' fixed returns, independent of market fluctuations. Benefits and limitations of HTM. HTM securities offer investors a predictable income stream and shield institutions from temporary price swings in the market. However, the structure also has limitations, such as illiquidity and missed opportunities if market interest rates rise. Nonetheless, HTM classification provides stability that has made it essential in managing financial portfolios. Relevance to Bitcoin. Applying HTM concepts to Bitcoin offers a promising path to manage Bitcoin's volatility, especially in the context of loans and collateralization. By structuring Bitcoin-backed loans with HTM principles, lenders and borrowers can avoid forced sales during downturns, establishing a foundation for stability, and making Bitcoin an attractive option for long-term collateral. Number 3. Technical structure for Bitcoin as collateral. To adapt Bitcoin to long-term lending markets, we propose a framework grounded in full reserve banking principles, hold-to-maturity practices, and transparent on-chain metrics. Full reserve banking model for Bitcoin. In traditional full reserve banking, deposit terms align with lending terms, reducing the risk of liquidity shortages. Applying this model to Bitcoin, depositors can pledge their Bitcoin for specified durations, allowing it to be lent out for the same term in return for interest and cash flow. This approach aligns with maturity transformation principles, mitigating the need for Bitcoin liquidation and supporting predictable cash flow. Implementing hold-to-maturity with Bitcoin. In Bitcoin-backed lending, an HTM structure would require collateral to be held until the loan's maturity date, stabilizing its use in lending markets. Through HTM practices, Bitcoin's value as collateral would remain secure, even through price volatility. This structure would prevent the need to liquidate Bitcoin assets in response to short-term price drops, which often drive market volatility. On-chain transparency and zero-knowledge proofs, ZKPs. To support HTM practices in a decentralized and privacy-conscious manner, we propose using on-chain metrics to verify loan terms without compromising user privacy. Zero-knowledge proofs, ZKPs, can enable this by verifying data conditions, such as maturity alignment, without revealing specific details. This on-chain transparency would act similarly to the Bitcoin community's proof of reserves requirements for centralized exchanges, ensuring that collateral terms are met without disclosing sensitive information. This content is brought to you by Bobby Giggs. Promote your brand here and reach a wide audience across platforms like YouTube, Instagram, and Facebook. Follow the links in the description to get started. 4. Advantages of the proposed framework. Stability in lending markets. Implementing full reserve and HTM mechanisms could stabilize Bitcoin's role in lending markets, enabling lenders and borrowers to rely on consistent terms and income streams without the risk of abrupt price swings affecting their holdings. This stability could support Bitcoin's long-term utility as a trusted collateral asset. Transparency and community trust. By using on-chain verification, this framework ensures transparency, fostering trust in Bitcoin-backed loans. Community oversight can further reinforce this transparency, giving the Bitcoin ecosystem confidence in Bitcoin as a viable financial asset. Reduced risk of forced sales. With Bitcoin collateral held to maturity, there's a reduced need for liquidation during market downturns, insulating lenders from forced sales. This could ultimately decrease Bitcoin's price volatility and make Bitcoin-based loans more resilient. 5. Community engagement and oversight. The success of this framework will depend on active community engagement, transparency, and education. These strategies can help the Bitcoin community adopt and refine this HTM-driven model. Education and transparency campaigns. An educational campaign would inform Bitcoin holders, lenders, and borrowers about the benefits and protections offered by full reserve lending and HTM practices. Accessible resources, from articles to webinars, would be crucial to raising awareness and gaining community buy-in. Governance and feedback mechanisms. Community involvement in governance would allow stakeholders to vote on critical parameters like collateral ratios, reserve requirements, and maturity terms. This approach, similar to the Bitcoin Improvement Proposal (BIP) process, would invite feedback and adjustment based on collective input, ensuring that the framework aligns with community standards. Open source and auditable metrics. To maintain transparency, the framework could be developed as open source software, allowing the Bitcoin community to audit and improve the code continuously. This transparency would build trust and encourage active collaboration, enabling the community to strengthen the framework's robustness over time. 6. Potential challenges and considerations. Market adaptation and liquidity needs. Implementing HTM in Bitcoin's high liquidity environment presents challenges. The demand for liquidity may complicate long-term holds, necessitating a balance between HTM requirements and the flexibility that Bitcoin holders may need. Legal and regulatory factors. Integrating traditional financial concepts into Bitcoin-based frameworks may invite scrutiny from regulators worldwide. Compliance considerations will be essential to ensure that this model aligns with regulatory standards across jurisdictions. Technology and privacy balance. Implementing zero-knowledge proofs and on-chain transparency requires a careful balance to maintain privacy without compromising accountability. Further innovation in cryptographic techniques may be needed to optimize this balance fully. 7. Conclusion. Summary of key benefits. This framework could significantly enhance Bitcoin's appeal as a stable, long-term collateral asset by integrating full reserve lending, HTM practices, and transparent on-chain metrics. Vision for Bitcoin's future role in finance. Positioning Bitcoin as a stable reserve asset would redefine its function in finance, enabling it to support secure, long-term loans and serve as a decentralized alternative to traditional reserves. Call to action. To bring this vision to life, we invite the Bitcoin community, developers, and financial stakeholders to engage with this framework. With collective effort and ongoing refinement, Bitcoin can become a trusted, transparent, and stable asset in the global financial system, pioneering a new era of decentralized, secure lending.